Welcome to the Roy Morgan Weekly Update. Today we're looking at bank home loan satisfaction and the latest research into car buying intentions, with a focus on electric vehicles and Teslas in particular. But first, a look at the key weekly indicators. Last week in federal politics has been variously described as toxic, venomous and shocking by media commentators and even by the politicians in the middle of it. It created a real distraction from the cost of living, inflation, the war in Ukraine and The Voice. So the week started with the Coalition questioning whether Katie Gallagher misled Parliament. But the strategy backfired spectacularly when Victorian Liberal Senator David Van rose to speak on the issue and was immediately accused of his own sexual misconduct. As further allegations came to light, Opposition leader Peter Dutton removed Senator Van from the Liberal Party room and called for his resignation from Parliament. Roy Morgan's surveying showed clearly the whole episode served to once again undermine the Liberal Party's attempts to improve its standing in the community, and especially with women. This week we saw support increasing for the government. Support for the Albanese government was up 1% to 57%, versus 43% for the Coalition on a two-party preferred basis. Government confidence, whether people think the country's going in the right direction or the wrong direction, also improved for the government, up 4 points to 86.5. Now, 48.5% of Australians say the country's heading in the wrong direction, and 35% say it's heading in the right direction. Clearly, they don't mean economically. Consumers continue to struggle, and consumer confidence, the ANZ Roy Morgan consumer confidence, was down to 72.4. That's 0.3 points down in a week, and the lowest it's been since early April 2020, right at the start of the pandemic. Consumer confidence has now spent 16 weeks below the mark of 80. The longest period at recession levels since the index began. This is really worrying. For the first time since the early days of the pandemic, consumer confidence for all three housing groups, homeowners, people paying off their homes and renters, has all dropped below 75. Inflation expectations have held steady at 5.5% for the third straight week. Australians still expect annual inflation to be 5.5% over each of the next couple of years. Now a look at the banking sector and home loans. As we've seen, the most impacted by interest rates are mortgage holders. And Roy Morgan's latest research shows this translating into downward pressure on satisfaction with their banks. Bendigo Bank, though, Australia's most trusted bank, is weathering this period of rising interest rates and high inflation better than any of its peers. Customer satisfaction among Bendigo Bank's home loan customers is now 91%. That's up almost 5% from a year ago. Close behind in second place is ING, with customer satisfaction for its home loan customers at 88.3%. Other banks to increase their customer satisfaction from a year ago include St George, ME Bank and Westpac. Of the big four banks, NAB emerged with its highest home loan customer satisfaction with a rating of 75.6%. Overall, ratings for home loan customer satisfaction among Australia's top 12 banks is now at 75.5%, down from a year ago, but still higher than before the pandemic in February 2020. The banking sector's generally performed well over the last year in maintaining fairly high levels of customer satisfaction, despite rising interest rates hitting many home loan customers. But there are still further challenges ahead, with interest rates continuing to rise and nearly 500,000 mortgages on fixed rate mortgages set to reset to higher rates during the second half of this year. How the banks handle this period of rapidly rising interest rates for around 500,000 Australians will have a huge impact on their customer satisfaction levels in the next years ahead. However, the period also presents banks with the opportunity to bring in new clients who may be unhappy with their current arrangements. And finally today, turning to the automotive sector and the increasing Australian demand for electric vehicles. Demand for electric vehicles in general, and Tesla's in particular, that's the brand most closely associated with electric vehicles, tracked together almost identically between 2016 and 2020. For instance, in the year to March 2017, 54,000 Australians said they intended to buy an electric vehicle in the next 4 years, and 53,000 of them said they intended to purchase a Tesla, an almost identical figure. Now, this situation persisted until interest in electric vehicles really began to take off in 2019 and 2020, and this rapid growth has continued ever since. The latest data for the year to March 2023 shows 548,000 Australians now saying they intend to purchase an electric vehicle in the next 4 years. That's a stunning increase of over 1,230%, more than 13 times higher in 4 years. And there's been a similar increase in interest for Tesla vehicles. Now, 369,000 Australians say they intend to purchase a Tesla in the next 4 years, an increase of almost 900%. Brands like BMW, Mercedes, Volvo, Hyundai, BYD, MG and Polestar are all offering electric vehicles and attracting the interest of people who want to buy an electric vehicle, but not necessarily a Tesla. Even so, the soaring interest in Tesla has powered the increase in sales, and so far in 2023, Tesla is now the 6th highest selling brand in Australia, behind market leaders like Toyota and Mazda. And this compares to Tesla being only the 16th largest selling brand as recently as 2022. And that's a wrap for this week. Subscribe to our Roy Morgan YouTube channel. It's free and it provides all the latest political, economic and market research data and insights. Thanks for listening today, and I look forward to bringing you the latest data on consumer confidence, inflation expectations and voting intentions next week. Take care. We'll see you next Tuesday.